You've worked with like the who's who in fintech, with Visa, Lending Club, Braintree, et cetera. Tell us a little bit about your background and then leading up to Highnote.
So I think I've had the fortune of working in my career in both large and smaller type companies, all in different areas of financial services. So early on, I was part of the business that was the very first online brokerage company way back when. And from there, I sort of moved into other areas of financial services. You mentioned Lending Club, which is obviously in credit. Visa was a great experience, very large, obviously large platform and global business in transaction processing. I ran all global development there. So really was able to see how systems run globally in real time at scale and how impactful payments and innovation can be really across the world. And so that was a very rewarding experience. From there, I was part of Braintree, as you mentioned, which is PayPal's acquiring business. And so even got further into kind of how merchants leverage technology and leverage capabilities in the acquiring side of payments. So when we looked at starting up Highnote 5 years ago, the premise was really around building a better payments platform for businesses that wanted to move faster and innovate, but still differentiate. So still create something that can drive competitive advantage, could drive revenue. And sort of 5 years ago, and even before that, there were a lot of legacy systems in the ecosystem that in a sense were built to sort of process transactions at scale, but really weren't designed to keep up with the pace of innovation occurring on the front end. So lots of interesting things were happening with consumer experiences in the payments realm, in new business models like DoorDash and Instacart, really leveraging the ability to implement payment methods without necessarily having to partner with a large bank, which takes a long time. That's a lot of friction, is expensive. And then the back end systems, the processing systems were legacy. And so we thought, hey, there needs to be a better way to enable innovation to occur on the front end, but all the way through the transaction life cycle. And to do that, we set up Highnote as a product platform, not as a processor. Some people think of Highnote as an issuer processor. You may hear that term. It's really, we do that, of course, but it's really about creating a product that allows customers to innovate. So we're not on the receiving end of requests for feature development from customers, because that tends to slow customers down. They're waiting for us to build them a feature. Rather, we have an enabling platform that pushes the innovation out to our customers so that they can move very quickly, differentiate, compete, drive revenue, and we handle everything else from a platform perspective. We handle the banking partnership, we handle the regulatory and compliance in partnership with our customer, but really allowing them to move quickly and to differentiate. And that's what Highnote is all about. And maybe in this discussion, we can get into a little bit more detail, but my background sort of led to kind of that thinking and that sort of awareness that it's the right time to create this product platform. And luckily, I was able to partner with my co-founder and CTO, who has been with me for 15 years, and we've sort of gone through the journey together and thought a lot about how to do this. And it's quite difficult to do. You can't just have the greatest engineers. You really have to have engineers that understand payments, that can come in and really think about how to build a general ledger at the core and how to manage pay in and pay out and really all of the different idiosyncrasies of payments. Building that platform at scale is what customers want, demand, and what we're seeing in terms of our traction and momentum.
And so is it really the platform you lead with, or is there a point solution that is solving the most acute problem for the client that you actually enter the relationship with?
Yeah, it's a really great question. The sales cycle, because we're a horizontal platform, meaning we're not specifically in certain verticals, we really target customers that have fairly similar problems. They're either with an existing provider and they can't move fast enough, or they have a new use case and they've gone to their existing provider, and the response has been can't do it, or it'll take a year, or it'll be really expensive. So we see a lot of those. We also see businesses that have large customer bases but don't have card products. And so we're in the mix with other competitors. And when they look at how we've designed the platform, how we think about the general ledger, data transparency, the fact that Highnote doesn't sit on top of another gateway. We don't have a lot of different, we don't have any providers in the mix. We are straight to the sort of the networks, and we bring the bank as well. Then they begin to see like, oh, well, we can not only solve our point solution to our business case, but we can expand this. We can start with issuing with Highnote and then expand into acquiring, or expand into instant payouts, or add consumer revolving credit. And so when you look at the platform, we're not a one-stop shop. It's really about driving revenue quickly, but also allowing businesses at scale to continue to partner with us in areas that allow them to grow revenue. And so it's a long way of answering the question that it's really about the openness of the platform that drives innovation and really drives revenue for our customers. And that's really been the key point that's been resonating with our customers is like, hey, this is a platform that was built the right way, doesn't have legacy infrastructure, doesn't have a lot of delays and friction in terms of how to get integrated. The engineering and technology teams from all of our customers love us. We really never lose any deals on the technology, and so getting across that and demonstrating value early has been why I think we've been able to grow so quickly.
You would think like some of these big financial institutions like a JP Morgan has a lot of competitive advantages. I'm probably understating it, but the JP Morgan payments, they seem
Yeah.
to be heading big into the fintech area. How do you view them? Are they a direct competitor? Do they overlap in certain areas?
Yeah, I mean the large banks and in fact the large processors actually represent opportunity for Highnote versus direct credit. Now we're never going to go and take out JP Morgan from an existing customer, large customer, in my opinion. But what we will do is we'll go in and sit right next to them and demonstrate that, hey, we can light up new use cases, we can unlock new revenue opportunities for a business that's already using Chase or anyone else. And it's really that angle that gets us in the door, if you will. And then as we demonstrate value, more and more of that quote volume, that payment volume can move over to Highnote. So it's really not about displacing or immediately doing a big cutover or migration from one of the incumbents. It's really about demonstrating value, driving revenue, and proving that this platform is the platform of the future for businesses that want to differentiate, want to compete, want to do things differently, and open up new business channels. That's where Highnote fits in. It's not about having an infrastructure that is just cranking through gazillions of transactions a night. Like that's important for banks, but the innovation I think is only accelerating, and certainly with all the different sort of innovations that are occurring around the world, payments is right in the thick of it, because that's at the heart of making everything work, in my opinion. And so it's important to have a modern platform that is continually pushing the boundaries, opening up new doors for businesses of all sizes, and that's what Highnote's all about.
And I know you've been having great success with partnerships and new clients coming on board, like sizable clients. What's a good example to help showcase kind of how a business is able to enhance revenue, by partnering with Highnote?
Yeah, there's a diverse set of customers across several different verticals. We just recently signed, you mentioned, maybe big banks or big processors. We signed BNY Mellon for Highnote to sort of embed our technology to pay all of their BNY's corporate bill pay customers, and recognizing that, of course, BNY's been doing this for a long time, but they didn't have a platform that could support virtual card as well as the other payment methods in quite the way that we did. Now, we're not ripping out all of the BNY infrastructure, but a great example of how we're sitting right next to unlocking new capabilities to serve their clients at, a very, very large, and this is a US top 13 bank that has partnered with Highnote. That's one example, all the way to maybe another example where we are the provider of a couple different disbursement capabilities, meaning using Highnote to send funds out to staff of, say, BJ's restaurants all around the U.S. So the tips that get dispersed for the staff there, they're all distributed and dispersed on Highnote cards, and that allows businesses to not have to facilitate tips through payroll or have people wait. They can actually get their tips on the first day of work at a BJ's restaurant, all distributed on a Highnote card. And then one that's actually quite timely in terms of what's going on with the government shutdown. We've had a partner called GiveCard that's been on board, one of our early customers, and they have stepped in, at least in San Francisco, to provide these SNAP benefits that have been halted because of the shutdown. They've signed a deal with the city of San Francisco to provide disbursement to hundreds of thousands of people that otherwise would not have had funding to pay for groceries and things like that, all on Highnote cards through a partner called GiveCard. So, I mean, that's a great way to sort of provide benefit, but it also demonstrates the sort of diversity of our platform in lighting up different use cases, both large institution, commercial and consumer disbursement, and those kind of use cases continue. So it's pretty exciting where things are headed.
Is there a cutoff in terms of like the size of organization that benefits the most from Highnote?
Yeah, we tend now. I mean, back in the earlier days, we were talking to a lot of early stage companies. I would say, to be honest with you, as we've grown, the value that we can provide to customers obviously increases based on the size. So we're sort of selling now into mid-market customers and large enterprises, and sort of tilting more towards large enterprises because, frankly, they see the benefit in the economics in terms of being able to compete, drive revenue faster. But also, we haven't even really stepped into this yet, but Highnote is not just in the card issuance business. We're also a full stack merchant acquirer processor. So we handle both the issuing and the acquiring, all based on the general ledger. And without getting too detailed or complicated in terms of the payments model, if you can acquire the card that you issue, there are tremendous economic benefits to customers that are partnered with you. And instead of having multiple different vendors providing issuing and acquiring and instant payouts, Highnote does all of it. And so the economics, the expenses are collapsed, but also the complexity of managing multiple partners and payments is also collapsed because it's one provider. And so we feel like those benefits really hit home for large enterprises that are doing millions and millions of acquiring, transactional volume per day. That's where Highnote can really shine. And we just announced a major partnership with an existing issuing customer called Netevia, who has an extremely large acquiring business. They partnered with us early on to provide issuing capabilities, but now they've just signed a 6-year agreement with Highnote to provide acquiring services, and we're talking billions and billions of volume, and that's sort of gotten us off the ground here and running on the acquiring side. So the model is sort of playing out. The thesis is still there. We have not pivoted our company, our strategy since 5 years ago. It's really been demonstrating to more and more businesses that are getting larger and larger how partnering with Highnote can really change the game for these businesses.
And it seems like you're sector agnostic, so you can go, including government.
Yeah, I mean, government's pretty tricky. It's difficult to work with, but we have customers that have found their way in. And once you sign with the government, there's a lot you can do. It's hard to get signed. I'm not saying that that's simple, but once you're in, there's a lot of different capabilities to provide payment services. And so, just to be clear, we are a platform that sells into, it's B2B, sells into customer, our subscribers, we call them, that then do these deals. And so as they build their businesses, that benefit also then accrues back to Highnote. So it's a really great model to be able to partner with the kind of the best in class across multiple verticals in order for them to continue to grow, drive momentum, be competitive, raise the bar in terms of the expectations and the capabilities, all based on kind of the underlying product platform at Highnote.
Mhm. Can you give us a sense for the scale of the business currently?
Yeah, I mean, we generally kind of measure growth from a top line perspective on what we call TPV, or total processing volume. And I'd say last year we were probably, I think we finished last year around 2.5 billion in volume. This year, we're on track to finish at closer to 4.5 to 5 billion in volume. And then the economics flow down from there in terms of, interchange fees, and we share most of that back to our customers. But in terms of who's using the platform and the sense of demand and growth, we're on a really good trajectory right now, and those are the top line numbers.
Mhm. And you've brought in a good amount of capital. You've got top tier investors. Can you tell us a little bit about how your investors have added value beyond financial capital?
Yeah, I think we were fortunate back 5 years ago to when we raised our seed round of funding, our initial round of funding, we sort of took a pretty prescriptive approach to sort of looking at partners, that were going to be in it for the long term, obviously very, very well respected and understood payments. It was important to me, given our model at Highnote, you need to understand payments, the payment ecosystem, and the benefit that the vision that we had in terms of issuing and acquiring, how big of an idea that is, and how difficult, challenging, but opportunistic, the plans were. And so we were able to partner with a more of a traditional seed stage investor called Costanoa, but also a growth investor called Oak, HCFT from New York. And Oak at the time really wasn't doing a lot of seed stage, early stage businesses. They're really more growth, or Series A and Series B. But bringing them both together to co-lead the seed investment was really important and great, because we knew that we could benefit from Costanoa, because they had the full support for early stage businesses in terms of getting off the ground. Oak was able to help us open up doors with the networks, or MasterCard and Visa, and make those. Although I worked at Visa, so I was able to sort of leverage some of those connections as well. But it doesn't hurt when you have large institutional investors at the table saying, look, these guys, they know what they're doing, they've got the execution capability, they've got the team, they've got the vision. And that allowed us to quickly, as an example, sign with First MasterCard and get directly integrated to their network for processing, because we didn't want to sit on top of another gateway, right? Because that collapses the value proposition, because you can't move fast if you have to rely on some other partner to do something for you. So we wanted to go direct to the networks. Then we quickly connected with Visa. And so I'd say, to answer your question, in the early stages, it was that type of help support that got us off the ground and running. And then, of course, Oak then led our Series A round of funding, and Costanoa participated. And then we just did a B round late last year, and we brought in Adam Street Partners, which is a fantastic investor, really understands payments, and of course all the other investors participated heavily in our Series B as well. So it's a small group of investors, but they're I think highly respected, and also very knowledgeable in payments, and able to really support the vision and help us get where we're going faster.